8:60, I'm Shireen Bhan. Here are the headlines we're tracking for you this evening. The sensex and the nifty end in the green for the sixth day, but gains are limited as financial stocks underperform. Mid-caps fare better than the blue chips. Crude oil prices remain firm after OPEC plus nations decide to cut production. Brent crude hovers around $85 per barrel. The RBI assumed an oil price of $85 in its calculation at the monetary policy meeting last week. City gas distributors lower prices after the cabinet accepts most of the Kirit Parikh panel's recommendations. The centre has imposed a ceiling and a floor price for gas produced by ONGC and Oil India with an annual escalation clause. Private weather forecaster SkyMet predicts a below normal monsoon this year. This could pose risks to food prices and the economy. SkyMet also warns that the likelihood of an El Nino is increasing. Private equity investors continue to bet big on healthcare in India. Temasek buys 59% stake in Manipal hospitals, valuing it at $5 billion in what is the largest private equity deal in the sector. Reliance Retail, Adani Group, Jindal Power, W.H. Smith are among the 49 suitors for bankrupt Future Retail. This is the second time the bids were invited for the company since all insolvency proceedings were initiated nearly a year ago. Government sources deny media reports of India halting FTA talks with the UK over the recent pro-Khalistan protests outside the Indian High Commission in London. A spokesperson for the UK Department of Business says both nations are committed to delivering an ambitious and mutually beneficial FTA. Adds the latest round of talks were held last month. China opposes Union Home Minister Amit Shah's visit to Arunachal Pradesh. This after the Indian government hit out at China's attempts to rename places in the state and claim sovereignty. China's foreign ministry says Shah's visit is not conducive to peace and tranquility of the border situation. Meta's global head of safety, Antigone Davis, is betting on artificial intelligence to combat fake news and bullying. Also calls for global rules to curb misinformation. Promises more specific tools for content creators in India. That's an exclusive. Well, let's start with the market action. The Sensex and the Nifty gained for the sixth day in a row, marking the longest winning streak that we've seen in 4 months for our markets. However, the gains were limited as financial stocks underperformed. So the Nifty Bank ended over 0.5% lower, snapping its 7-day gaining streak. Meanwhile, mid-caps fared better than the blue chips. Sonia standing by to wrap up the market action for us. Sonia.
Well, thanks a lot for that. Today was entirely a day of consolidation. Not too much action on the headline index. The Nifty consolidated with minor gains. The Bank Nifty, in fact, was under a bit of pressure, so it was down about 0.5%. IndusInd Bank, ICICI Bank, Axis Bank were a tad bit soft today. Nothing alarming. But on the upside, a lot of companies, after coming out with their Q4 business updates, surged in trade. Titan was up about 1%. Tata Motors was the star of the show, up about 5% after strong JLR numbers in Q4. L&T hit a fresh 52-week high today as well. Another pocket that suffered a bit today was FMCG. So you had Nestle, Britannia, HUL that were all under pressure. And the other sector, if you're looking at one, is technology. All eyes will be on names like TCS and Infosys that come out with numbers on the 12th and 13th of April. Going forward, and those stocks will definitely be in focus as well. But otherwise, it was a day of complete consolidation. The market just holding on to its gains of last week, ending around that 17,630 level.
Sonia, many thanks for joining us. In the commodity market, crude oil prices remaining firm after major oil producers decided to cut production in what was a surprise move. Early last week, that is the decision that was taken by the OPEC plus nations. Tighter supplies have balanced concerns about weakening global growth. Brent staying above $85 a barrel. In fact, the Reserve Bank of India's latest inflation forecast assumed a crude oil price of $85 a barrel, down from the $95 it had assumed in February. While your cooking gas or CNG may have become cheaper, city gas distributors have lowered prices after the cabinet accepted most of the Kirit Parikh panel's recommendations. The centre's put a ceiling of $6.5 per million British thermal unit and fixed the floor price at $4 for gas produced by ONGC and Oil India. The ceiling and floor price will be applicable for the first 5 years with an annual escalation clause. Take a look.
The APM prices recommendations that we had made were following that it should be fixed within a floor and a ceiling price, and that is accepted by the government. The same floor and ceiling we had suggested, $4 per million BTU. and $6.5 per million BTU. I think the consumers will are getting cheaper price for the PNG and CNG supplies. Second measure the government has taken is that it has provided 20% additional money or price increase for gas that is produced by ONGC and OIL.
Well, that is Kirit Parikh on his recommendations being accepted by the cabinet. Sonal Bhutra joins us now with more on how this formula will work. Sonal, explain the math. What does it mean for consumers and for industry?
Well, yes, this has come as a material relief to the gas users as the government has accepted Crude committee recommendations and has amended as to why gas is and how gas is priced in the country. So let's understand some basics first. India consumes around 150 to 160 MMSCMD of gas totally, out of which 50% or 80 MMSCMD is produced in the country and rest is imported. Out of this, 77 to 78% is the gas under APM or administered price mechanism and rest is non-APM. Out of the total production, 83% is produced by ONGC and Oil India combined and rest is basically private players or JVs. So the change that has come about is in the APM gas pricing. Let's first talk about what was the gas pricing scenario earlier. APM gas prices, they were basically decided on basis of a formula, which is the weighted average price of 4 global benchmarks, that is US Henry Hub, Canada-based Alberta gas, the UK-based NBP and Russian gas. It was revised every 6 months and it was set at $8.57 per MMBTU as per the last revision. Now there has been a change to that. Gas prices will now be announced every 1 month. The prices will be pegged at 10% of international price of Indian crude basket, and to protect the interest of consumers, there is a ceiling to this. The gas prices, that is $6.50 per MMBTU, and the floor is at $4 per MMBTU, which is for the benefit of producers. Now it's important to note that ceiling will be maintained for FY24 and FY25, post which this will see an addition of $0.25 per MMBTU every year. Gas from non-nomination blocks of oil and ONGC will have 20% premium to APM prices, and there is no change in pricing regime for difficult fields or any LP blocks. Now, this change was brought about because of the way gas prices moved during the Russia-Ukraine war as the global supply of gas was impacted. This led to prices in Europe going up by 3 times, prices in the US touching new highs of $9 per MMBTU. This led to higher prices in India as well. And that is the reason why CNG prices in our own country and city shot up by 80%. So that is the kind of move that we saw in 2022 as well. Now let's move on. After talking about how CNG and PNG prices went up, that was the reason why the government went ahead and set up the Kirit Parikh committee. But with the new pricing regime change that has come in from here, we will see that the prices have been set at $9.16, that is April 1st to 7th. Post that it is at $7.92 per MMBTU. But again, the ceiling is at $6.50 per MMBTU. This has come in as a big relief to city gas distribution companies. IGL gets around 80% volumes from CNG and PNG segment, MGL at 87%, and Gujarat Gas at 36%. So the first two tend to benefit the most. As a result of all this, there have been massive price cuts by all the players. MGL has cut CNG prices by 8 rupees, PNG by 5 rupees. We have seen Adani Total Gas cutting CNG prices by 8 rupees, PNG prices by 5 rupees. There's IGL which has cut prices by 6 rupees. GAIL Gas has cut prices by 6 to 7 rupees per kg, and this has come as a relief to consumers as well. But for producers like ONGC and Oil India, in the near term, there will be a hit to their realizations, with both of them seeing cuts of around 24% as for brokerages. But of course, in the longer term, it's a positive because of the floor. Brokerages are positive on the entire city gas distribution space. Jefferies has upgraded the EBITDA estimates by 6 to 20% for all the 3 companies. For GAIL, it will lead to a savings of 1,100 crore rupees for LPG segment due to lower gas costs. Morgan Stanley says that not only city gas distribution companies, new pricing mechanism is a positive for producers as well and removes a multi-decade overhang on long-term returns. And CLSA says despite the price cuts, margins will be positive for MGL and IGL, and this takes discount of CNG versus diesel back to 30% and brings back the pricing power. Government's intent to assure $75 to $80 barrel realization also raises earnings predictability for ONGC and Oil India.
Sonal, many thanks for joining us. Now, after suffering from a heat wave and untimely rains, the Indian agri sector may be staring at a below normal monsoon. Weather forecaster SkyMet has predicted rainfall at 94% with only 25% chances of a normal rainfall and zero probability of excess rains. Of the 4 months in monsoon, the month of June has the highest chances to experience normal rainfall. According to SkyMet, the likelihood of El Nino is increasing, which is an indicator of a weaker monsoon.
We expect that monsoon will be 94% of long period average, that is 8.6 mm. And El Nino will be evolving and it will be much stronger in second half of monsoon. June will be, we can say, around 99% of LPA. And as we progress further during monsoon, the August and September will have the impact of El Nino in greater way.
In other news, government sources have denied reports of India halting talks with the UK for a free trade agreement. British paper The Times had reported that the Indian government wouldn't proceed with the trade talks until the British government publicly condemned recent pro-Khalistan protests in London. The UK government has also denied the report. The UK Department for Business and Trade has said that both India and the UK are committed to delivering an ambitious and mutually beneficial FTA, one that they hope will conclude in the latest round of trade talks that took place last month. The department added that the Foreign Secretary James Cleverly has condemned the recent acts of violence at the Indian High Commission. Remember, the FTA was expected to be inked in October last year. The Indian government hasn't given a deadline on sealing the trade deal, but has clarified that talks haven't stalled. 49 entities, including Reliance Retail and an Adani Group joint venture company, have submitted expressions of interest for the bankrupt Future Retail. Shilpa joins us now to take us through more. Shilpa, tell us more about the prospective bidders.
Well, a list was released on the 8th of April by Future Retail, where a list of 49 entities were there, and these are the eligible prospective resolution applicants. Let me take you through a few notable names. There's Reliance Retail, there's Jindal Power, there's a Adani JV called April Moon Retail, there's JC Flowers, UV Stress Asset Managements, WH Smith, and these are among the 49 entities that have submitted EOIs. Now, remember, April Moon Retail, in fact, is a joint venture between Adani Airport Holdings and the Flamingo Group. And this is the second round of EOIs that have been invited. Now, the last time about 13 EOIs were received in November 2022. And at that time also, this Adani JV, April Moon Retail, Reliance Retail, WH Smith had also submitted EOIs at that time. But however, despite being shortlisted, none of the resolution plans were not submitted by any of these players, despite the deadline being extended twice, and the last extension was to the 20th of February. Now, remember, Future Retail went into insolvency proceedings in July 2022, and as of March 2023, financial creditors have claimed dues worth about 21,500 crores, and of this, about 19,000 crores have been admitted. Now, the final list of the prospective applications will be released on the 13th of April of all the eligible ones out of this entire 49 entities, and after that, the deadline for submitting the resolution plans will be the 15th of May. Back to you.
All right, Shilpa, many thanks for joining us. In a bid to boost the production of green hydrogen fuel, the government plans to provide incentives worth 13,000 crore rupees to producers of green hydrogen. Sources have told CNBC-TV18 the first tranche of the green hydrogen transition scheme will begin this quarter, and the second tranche will begin in the subsequent quarter, with incentives at 30 rupees a kg, worth 10% off the cost. The government expects the new scheme to build a production capacity of 3.6 million tons of green hydrogen in the next 3 years. Well, the big story from Deal Street, Singapore-based private equity giant Temasek has agreed to buy 59% stake in Manipal Hospitals, valuing it at $5 billion. This is the largest private equity deal in the Indian healthcare space. In fact, private equity players have flocked to the sector, with several $1 billion in deals being inked in the last few years. Advent, GIC, TPG, Shanghai, Monsoon and several other PE players will now have a sizable presence in India's healthcare industry. So what makes healthcare so attractive for investors? Ekta Batra is here with the numbers. Ekta.
Thanks for that. Well, in what is one of the largest deals which have taken place in a pan-India hospital company, Singapore-based PE fund Temasek is buying controlling stake in India's second largest hospital chain,
Manipal hospitals for over $2 billion. Temasek already owns 18% stake in the hospital and will be buying an additional 41% from promoters and others for around 16,400 crores. Manipal, with a bed count of around 8,300 and 29 hospitals in 16 cities, is India's second largest pan-India player after Apollo Hospitals. The company, which is looking to ramp up its bed count around 10,500 in 2 years, has seen revenues more than double to around 4,000 crores and margins expand to around 24% in FY22, valuing the deal at around 10 times FY22 sales. Now, talking about valuations, in the past 5 years, valuations have risen as much as 8x in the hospital space. 2018, for example, saw two pan-Indian hospital companies sell stake, Fortis and Max Health. Fortis, interestingly, which was once bid for by Manipal and sold to IHH, another non-Indian promoter, for a valuation of around 13,000 crores, currently has a market cap which is almost 50% higher. In the same year, KKR picked up majority stake in Max Health for a valuation of just around 4,265 crores. The current market cap is over 42,000 crores. KKR also exited Max with a 5x gain last year. Valuations for Indian hospitals, experts say, really pivoted during COVID-19, which benefited, for example, from better improved long-term structural drivers such as better medical awareness, insurance penetration post the pandemic, and medical tourism reverting back to normal. And Manipal's valuations have just about almost doubled in the past 2 years, is a good indication of this interest. In 2021, National Investment Infra Fund, or NIIF, invested around 2,100 crores for around 8 to 9% stake in the company, valuing it at around 25 to 26,000 crores, which has now almost doubled to around 40,000 odd crores. And this is reflected in hospital stocks too, which have risen anywhere between 25 to even close to 100% since the start of FY22. However, while hospital stocks have risen and valuations have expanded, based on the 10 times FY22 market cap to sales valuation ascribed to the Manipal Temasek deal, a quick comparative check indicates there might just be room for further up move for a few of the current listed hospitals. Lastly, this deal also points to a trend of PE funds doing control deals in the Indian healthcare space. Besides KKR Max, the other recent examples include the Ontario Teachers, Sterling Hospitals Upward PE, and the Samara Marengo platform as well.
Ekta, many thanks for joining us and thanks for wrapping up all of those numbers so comprehensively. Meanwhile, Ranjan Pai of Manipal Hospital spoke with CNBC-TV18 about the Temasek deal. He said that they sold stake to Temasek in order to pare down debt of the holding company and will now hold 30% after the transaction. He also added that Manipal Hospitals will not be selling further stake in the hospital business as of now. The Adani Group has hit out at a report on its reliance on offshore funding. The group called a report by the Financial Times a mendacious attempt to show the conglomerate in poor light. In an exchange filing, Adani Group has called the media report selective and said the insinuations made are false and damaging. Global story, the Chinese army continues heavy drills as part of its 3-day scheduled exercises around Taiwan. The drills have come on the back of the Taiwanese president's recent trip to the US and her meeting with House Speaker Kevin McCarthy. NBC's Courtney Cube gets us the latest.
A massive show of military might off the coast of Taiwan. China deploying fighter jets and warships Saturday, sending 71 planes into Taiwan's airspace, and at least 9 Chinese warships now surrounding the self-governed island of Taiwan, simulating a naval blockade. It's the start of Exercise Joint Sword, 3 days of military action that Beijing says is a serious warning.
This is their way of trying to intimidate.
The exercise is in response to days of high-level talks between the U.S. and Taiwan, beginning with President Tsai's meeting with House Speaker Kevin McCarthy in California. Hours later, a congressional delegation arriving here in Taipei for 3 days of engagements.
It is important that all democracies stand together against tyranny and oppression.
President Tsai saying Taiwan has faced continued authoritarian expansionism, making cooperation among democracies even more important. Chairman of the House Foreign Affairs Committee, Congressman Mike McCall, vowing to deliver weapons and training to Taiwan's military.
We will provide training to your military, not for war, but for peace.
China's response so far more muted than their actions after then-Speaker Nancy Pelosi visited last summer, when their drills included firing ballistic missiles. But the tensions between the U.S. and China higher now, this military show of force causing concern in the region and beyond. Today, Taiwan pledging to respond with a calm, rational, and serious attitude. Meanwhile, China not showing any signs of backing down. Congressman McCall stressed Taiwan needs weapons to deter and, if need be, defend against a Chinese invasion. But with about $19 billion in weapons meant for Taiwan now backlogged, many of those systems won't arrive here for years.
And on to a CNBC-TV18 exclusive. Meta's global head of safety, Antigone Davis, is betting on artificial intelligence to combat fake news and bullying. Speaking to me earlier today, David said India is being used as the first market to test several safety tools for Meta. She's also called for global rules to curb misinformation, also promising more specific tools for content creators in India and making India the first market to roll out some of those features. Here's a slice of that conversation.
Safety-wise, we have a big campaign called Report, Don't Share. It's in relation to child sexual exploitation material. We launched that first in India. We worked with Indian organizations to develop the content to make sure that it had the right context and brought it to India first.
Was there a reason why you brought it to India first?
I think we have a large number of users in India. There are a large number of young users in India, and we wanted to be sure that we were meeting the needs of the country. There are other things that we've done that have been India first on the safety front as well. For example, in terms of women's safety, we have something that's where you can lock your profile, because we heard that there were issues around photo safety for women in India, and so we developed a specific tool and launched it here in India.
You know, speaking of how the experience and the learnings from India have helped you customize some of these solutions, let's talk about WhatsApp, because that's ubiquitous here in India and also has become a large part of the problem, especially when we talk about the dissemination of fake news, misinformation, and so on and so forth. And many measures or steps have been taken by Meta to try and curb that. But, you know, do you believe that you need to do more? And what is the learning now after what you've done?
Well, what I would say about safety generally is that we always feel like we want to do more. In other words, the way in which people are using technology is constantly evolving, and the way in which we're deploying safety is constantly evolving. And I don't think this is an area where you would ever see us sort of stop and say, that's it, we're done, we're finished. It's always changing. It's an adversarial space, and so we're committed to always improving. You talked about misinformation, for example, with WhatsApp. One of the things that we did was to set forwarding limits on content to ensure that we could slow down that any kind of spread of misinformation.
You know, one, of course, is the issue of regulators or governments telling you to take something down. And there have been takedown requests and we've seen that number go up considerably. But preemptive action, you know, give me an anecdote of how Meta is responding to this preemptively, responding to what you may see as misinformation, fake news, bullying, you know, online harassment, for instance.
Well, this goes back actually to when you were talking about AI. So we have policies. You're not allowed to violate our policies. They're open and stated on our platform, and they cover exactly the content that you're talking about: bullying content, hate speech, misinformation, and other types of content. And we then use AI that can identify that content before and move it before people report it to us.
You can catch that conversation with Meta's global head of safety, Antigone Davis, at 5:30 p.m. and 9:30 p.m. right here on CNBC-TV18. And that is it on this edition of Business 360. Thanks very much for watching. Stay tuned to CNBC-TV18. The news continues when we return.